I'd been anxious for some time about the debate in Washington over the debt ceiling, and I became sort of focused, I would say over-focused, on the idea that we might be facing some kind of a default Armageddon, and I decided to go into my 401k plan, and I sold all the stocks and all the bonds in my portfolio, and I converted them to the closest thing I could get to cash. Within a few days, it sure looked like I was brilliant. That quarter, the third quarter of last year, was one of the worst quarters we've had in a while, and I felt a little bit like a genius. However, I do suspect that in the end, this is a move that's going to cost me money, that I'm going to move into the market fairly reluctantly, and I'll probably miss some upside. One of the great dangers of trying to market time is even if you get the decision to go outright, then you have to decide when to get in. The move I had made was not fully well considered. I didn't have much of a plan about what I was going to do about it. I don't really believe in market timing, and yet here I was having made this very large market timing move and then left to kind of consider, okay, what's my next market timing move? How do I decide when I'm going to get back in? At this point I haven't made any losses. I'm still roughly around even. Intellectually, I think that I should probably have some money in stocks. My plan is to kind of ease in over time. That's a very popular strategy. Financial theory and the numbers don't back up the idea that you should do that, but one of the things it does do is kind of lower the stakes of the decision to go back in the market. I won't have to fear that regret I might feel if the day that I go into the market there is, as could very easily happen, yet another crisis point in Europe that brings the market crashing down.